And the way in which it's changed is I've stripped off the 200 EMA and just so that I've got a greater focus on the 50 EMA on all time frames, and just switching the use of fibs over to the 2-hour charts. My 6-minute chart is much more focused on support and resistance. So what I'm doing here with the pound yen is I'm just watching how we came off last week. You can see, it's levels that matter. It's levels that matter. And on this one, you can stick a whole load of indicators on charts, but unless you're just really focused on the levels, then I think it's harder to trade. You can see when this pound yen shot up to 536, 17536, we started putting in lower highs, and once we broke this 506, we spent the rest of the week tumbling down to 173. As you know, I really like big numbers, so to me 173 was a good legitimate target. 173.50 had major support, so on the way down you could have just managed to stop up there and drop back down. But so preparation, what do I do? What's my normal preparation these days, and how, if it has changed, how has it changed? It's like I said, there's 60 minutes. I'm a little bit more focused on chart patterns on the 60 minutes. I'm very focused on where the 50 EMA is, and this this was a lovely push up on this one. Once we got above 340 on the way up, what we did, we retested it and then ran. This is why this is perhaps the slightly harder, less intuitive part of trading. Once something's run and starts to put in red bars, do you short it? Well, the answer is no. What you do, the idea is you buy pullbacks in trends. And I recently heard a trader say that there's no such thing as overbought or oversold. And I thought that was an interesting concept, because if you think like that, it's much easier to stay in big trends. We'll look at oil in a minute, because oil is a prime example of this. I've made money out of oil recently, but I've not made as much as I should have done, which one of the reasons that made me refine just a couple of analysis techniques I use. So I'm sure you all learnt that resistance becomes support once it's broken, etc., in a run like this. But how many people actually apply it? Well, the big money does, and the experienced traders do, but perhaps the less experienced don't. And again, the way my attitude towards this is, you can get, let's see what time of day. Yeah, this was early morning. My attitude towards this is, you can take a position down here at 340, 350, and you can hold it with such a tiny stop. So why not risk a small position or a normal size position to see if that can leg up? And that's pretty much where I think we are at the moment. We've got inflation tomorrow. Let me just double check the data. Yeah, we've got inflation at 9:30 tomorrow, expected to be slightly stronger. And then we've got Bank of England governor speaking half an hour later. And then the following day, we've got UK jobs looking for a drop from 6.6 to 6.5. Okay, so at the moment this is looking, we're just past the hour. There was a potential stopping bar, but it was a lower close. My attitude towards what's going on here is, I think it's worth taking 340 with a stop under 325. Okay, because I take lots of little trades like that don't work, but because they're such tiny stop outs, I don't really mind. If you want to play it safer, which is a perfectly good, sensible way of approaching this market, if you want to play it more sensible, watch for this level like this and wait until we close outside of this box, and then we might close a lot higher, and you may end up buying a lot higher. Well, I say a lot higher, a little higher. In most cases like this, you end up paying about another 5 or 10 points. You won't end up paying a massive amount of more money. So I think that is worth trading. Trades I did last week. Let's look at oil now. Let's see what I did in oil. Then I'll talk about one other routine technique I'm using a lot more before moving on to quick look at the indices and then straight into stocks. I will be spending more and more time. I will be aiming to spend about 75-80% of this time on stocks from now on, because my attention to stocks has drifted, and I want to pull that right back and put it up front. Yeah, you can see the reason why you can see the 50 EMA on this, and this is the big picture. This is the real big picture. This is when oil really started to crack. We had several attempts at the 750 mark, and this was in the Asian period up here, that spike up to 747. But it was during a late Euro session that we started retesting the underside of that and dropping, and it was a Euro opening session where we failed at 106.70 and started to drop higher, and it's a little bit of a bumpy ride, but the point was the trend was always to short. I did get chunks of this, but I didn't get enough chunks. On Friday, for example, I traded I think this was the Thursday, wasn't it? I can't remember the dates now. I certainly traded a chunk of that to the upside. And I think I traded, that's what I did. I traded that into that resistance. It then started to sell, and then I started shorting into the US session. I think the key point of this is, and that was just a simple, once that 235 broke, I remember I was actually short this when the US, so when the Canadian employment data came out, and the 5-minute chart was already quite low, but because we'd broken this 235, I just held on to it. We looked as if 2 or 3 5-minute bars looked as if they were going to push up, but I just held my stop, sat in it, and started to trade it to the downside. So I think if you want to stay on the right side of these trends, then you've got to remember which is the overriding direction. And the oil, it was a counter trend trade, so I'm used to switching my allegiance from long to short. But if you're not used to that, then don't even bother trying to get a few points to the long side. Just concentrate on where the short signal is going to be, and short it. I mean, this could be a daily chart on a stock. So you might have thought, well, it's sold off for weeks on end. Oops, it must have reversed now. And it does reverse, but as soon as it gets extended again, it just reverts back to its normal trending behavior. Okay, so this was getting towards the end of the week, and to me this was just a lot of short covering. We're coming into some key levels. This was probably just a lot of short covering, not necessarily reversal. And that's the danger of looking on smaller time frames and doing counter trend trades. Okay, where do I think oil is going to go next? I think oil, well, let's look at the weekly for that. This does go against the 20-year average cycle, by the way. Normally we get a push through July into the back end of July, so this is slightly unusual, but we did have a spinning top up there on the 16th of July, on the week of the 16th of July, and so on a setup like that, that was pretty convincing. So I was frustrated that I didn't get as much of that leg down as I should have done. And at various times, I have to admit, that sounds bad. Okay, anybody else got bad sound? Okay. Yeah, so where do I think it's going to go here? We have got a massive amount of support here. This is my big picture on oil. I've got a weekly chart with this big box. So we had the run up to 150. I think because this is a continual contract, it tends to skew it even. So 112 became a major resistance, with the exception of that pop up in 2011. We had a nice failure here on Feb 2012. We failed here after a little spike up in September 2013, and here we are with a lower high. So this is one of the most, it was quite a good 3-week sell-off. We haven't had such a sell-off like that since spring, early summer 2012. So we could, if we start closing down here, let's not all get bullish here at the moment. I know we are trying to hold here just above the 100 mark. In fact, we're about 20 points above. Yeah, roughly 25, 22 points above the 100 mark. And we look as if, where are we? Just coming to the pit close, and they're running it up 20, 30 points into the pit close. So if we can hold up here above 150, we might stand a chance of reversing. Otherwise, don't think about reversals until this weekly chart is above this level here, at which point it may be worth trying to trade it back up to 107.50 again. I think we'll probably end up with a box. I think we'll probably end up in that sort of area into perhaps back into autumn, early autumn, at which point in September we normally sell off. Once the dry season's over, we normally sell, assuming we hold here and assuming we start closing above 101, then I think we might get back to 105, at which point I think we might, if that turns out to be into August and September, I think we might roll over and come back to here. The reason, from a fundamental point of view, I think because we are closer and closer to rate rises, markets are factoring in rate rises, and oil and commodities in general do not like rate rises, because it means people have potentially got fewer pennies in their pockets. Okay, that's a nice amount of support there. I would be very happy to start buying, to chipping away at the lows here, but like I said, I think a good trader does, yeah, that does ask me about, a good trader does change allegiance. Okay, so my routine would be to mark off on the 60-minute chart major support and resistance as shown on this oil. I will then put the fibs on the 2 hours. We'll pick the one chart. I haven't got fibs on 2 hours, wouldn't I? Right, let's go to pound yen. I would put fibs on the last big move on the 2 hours. Let's go into stocks quite soon, as you can see here. So I think we are on a downtrend because we're under the 50 MA on the 2 hour charts and indeed the 1 hour chart. We have at the moment, this is potentially like oil, where we are putting in lower highs, coming under the 50 MA. The case for the bulls is that we had a nice run up here, and this is a potential reversal zone. At the moment we're holding it. So hold 350 and we stand a chance of getting back up to 400 and 175, but all the time we're under 350. We could just break. If we break 335 tomorrow or even overnight, I think I would expect 173 to give way. I would expect these lower levels to get hit. So this to me is a major level. So the routine is support and resistance, major support and resistance on the 60 minutes, the fibs on the last big move on the 2 hour, and the fibs on the previous day on the 15 minutes. Try not to use trend lines too much, because I think horizontal support and resistance is much more valid than trend lines. So give priority to support and resistance, not trend lines. What other part? Right, in terms of specific markets, for Forex, I would mark off the overnight range, and particularly the first 15-minute bar of the session. This was the first 15-minute bar of the session today. So we peaked above it, we got extended, clouded it at 9:45, and all the pullbacks to this level then got sold. It took a long while to come back to the daily pivot, to come out of the box and come back to the daily pivot, but that's pretty much what it did. How could you trade that? You'd have to be at your charts up until at least 10 o'clock to capture that. Otherwise, you're just not going to get it. So let's do. Let me show you some slides. Hang on. This was a good short in the FTSE. This was the overnight range, and I think that blue bar could possibly have been the first 15 minutes. I should have marked it, shouldn't I? I don't know. I'm pointing to that red bar. So the first bar into the open was red. So we got a little pullback into that bar in the next 15 minutes, and then I remember this, as the data came out, it just got lower and lower and lower, and then we sold off down to the 6,700. I've got a feeling we actually turned at 6,700 on that one. Point being, the overnight range was marked off, and although we sat in the middle of it and had a blue bar, a few blue bars in the middle of that, overall the riding pressure was downwards. This was a 15-minute support and resistance on the FTSE at 68.63. I think this push up here into 68.80, 66.65 was there was the 8 o'clock open, and then we sold off. And I did exactly the same on the Dow on, I think it was either Thursday or Friday. This was an open move into this was an overnight support range. We came down at the around about 8 o'clock, 10 past 8 in the morning, hit this support, and then pushed back up into the resistance area. So my point is, part of my routine is, here's a clear example. I've got a box around the FTSE overnight range. It flaps around for the first 5 to 10 minutes, but then holds the 67.05 and then runs to 67.50. Oh, this is actually this morning, isn't it? Yeah, this is this morning. Okay. And have we got any others? Not at the moment. Okay. Other parts of my routine. Let me think. I mark off big round numbers. Within the context of support and resistance, I would mark off a big number. What else? I'm just looking down my checklist. I would check for data that's coming up. I'm very focused on the previous session. So if I'm trading in the morning, I want to mark off the Asian session. If I'm trading in the US session, I want to mark off the Euro session, and so on and so forth. So that I'm constantly looking at what the market wants to hold and what it may reject. A good example of this is, before we go straight onto stocks, because I am overrunning, this was a good example on Friday. I've been watching, I took some moves on the CAD yen on the previous days. I remember taking that one. Yeah, I think I did take that one. Can't remember the timing on these now. I did miss the entrance to this one, but I did catch it as it went up here and took it off up here. I got this bit, but I was annoyed because it was CAD data and I wasn't looking at this when the actual data came out, so I didn't catch as much as I should have done. Ooh, the other key thing is, I haven't got a slide for this, and I will get one. Timing. Yeah, by looking at the Euro session and the Asian ranges and so on, I'm very tuned into obviously the Dow Open. I'm marking off ranges in the Dow Open. Wow, this is a nice move into the close. 15-minute hammer, and that's 50 points. But if you just look at, so I'm doing what I normally do. I'm flitting around too much. Let's just look at the opening. Where's the 2 o'clock bar? That was the opening bar of the range. So 3 o'clock, 3:30 on a normal day is reversal time anyway. What I've done is, so when we broke down from the first 15-minute bar, we just came into support. Support got bought, and here we are charging up. So there's a few things going on here. We've got, I will move on swiftly now. Excuse me. Yeah, my throat's drying up. Hang on. Yeah. There's a lot going on here. We've got major support. We've got a 15-minute hammer. Pull back that major support over a 30-minute period before it bounces up. We come back to the major pivot line there at 150. And that's that's a nice move. That's a clean chart. It's a clear zigzag, isn't it? Pushes up into resistance, pushes down to support, pushes up to resistance, slightly above, pushes down. The new support is higher, so put in a higher low, and then we go. Nice move. What I have done is, if I just show you this, I got hold of. I've done a sheet like this for 4 main days of trading, excluding Friday. Just marked on when I prefer to look at certain markets. So obviously I've marked on 8 to 9 o'clock for the pound, 2 to 2:15. I start to look at oil. Obviously, 2 to 2:30 for the range in the Dow, and then I would ordinarily start to look at oil between to 6 to 7. If I'm around, I don't want to spend chunks of a 12-hour day or 11, 12-hour day looking at the markets. But if I'm around, I will do that. Anyway, that's just, you asked me about routine, so I've just quickly gone through aspects of my routine. Let's hope I can get. How am I going to get rid of this now? I never know how to get rid of these things. What button do I press to get rid of this? This is where Windows 8 drives you nuts.